$903 billion. That's what companies spent in 2014 to lease equipment. These are companies that lease equipment across industries, from agricultural equipment to construction to manufacturing, even fleets of automobiles. But it's an incredibly frustrating industry to play with because it's inherently inefficient. I learned this firsthand from my very first startup. We actually leased all of our equipment, mostly because we wanted to conserve cash. It helped us with cash flow management. It also helped us maintain a pristine balance sheet. We didn't want debt on our balance sheet as a company that young. But most importantly for us as a technology company, we needed to refresh our technology periodically so that we could maintain a competitive advantage over our marketplace. And we're not alone. Over 80% of all companies lease some type of equipment, some or all of their equipment. That's 22 million companies in the United States. It's an industry that's growing at 9% annually, and it's expected to top $1.4 trillion in 2015. Huge industry. But this is where the ineffective structure of the industry comes into play. It's extremely inefficient. Companies overpay up to 20%. That's a $67 billion loss because of one thing. Because they committed the same cardinal sin that we did as a startup company. They didn't shop around for the best rates and terms that they could find in the industry. And there's good reason for that. Number one, it's extremely time consuming. The application process alone can take up to 3 weeks. It's complex. You have to submit multiple years of financial statements as well as tax documents, including some of your own personal data for being able to secure that equipment. It leaves you uninformed during the process. Once you submit your application, you don't know where you are in the process until you receive either an approval or a decline. And worst of all, if you want to compare rates and terms from different providers, you have to go through this cycle multiple times. It's a big enough problem that the CEO of Lending Club made this statement several years ago. He said, essentially, business owners don't have the time to shop around for the best rates and terms. It's just too complex. It takes too long. And he created Lending Club, which is now valued at $7.4 billion, excuse me. And that's the premise that we use to start up Cathedral Leasing. We are a B2B marketplace for the equipment leasing industry that takes companies and matches them to lease providers so that they can access a number of different rates and terms in the industry. We make it efficient. Here's how we do it. This is the traditional industry. Each company connects with either their bank or a leasing firm or the leasing component that's provided by their OEMs, or they connect with a lease broker who only has a network of a few leasing firms that they can connect to. But they have to apply to this every single time individually. What we've adopted is the lending tree model for equipment leasing. With one application, we can connect you with multiple sources of lease financing at banks, at leasing firms, and at non-bank financial institutions. Here's how it works. We actually use our online platform to source applications from a company. We filter them using our algorithms. We're able to score them and then match them to the underwriting criteria of multiple leasing firms and banks. And those entities respond with multiple offers that companies can then use to compare rates and terms. And here's where we are in the competitive landscape. Surprisingly enough, equipment leasing is not a sexy business. I know, a collective gasp. But what that means is that there are very few competitors in our space online. So we actually have a huge advantage over them in terms of what we can provide with our platform. Now, how does this business work? Well, there are 3 revenue streams that we count on. Number one, every time that we factor a qualified lead to a bank or leasing firm, we receive a qualified lead fee. Number 2, we receive a commission, if you will, of 3% of the total transaction for every source deal, every single completed deal. And number 3, we offer a SaaS subscription for both companies and our leasing partners that want to access the data that we collect during that process. And this actually creates a revenue stream for us that can total $34 million in year 4, and $19.4 million of net revenue. And we've got the team to be able to pull this off. I've had 4 startups myself in the technology space. Camelia Dianati was the former Vice President of Technology at LendingTree. Jonathan Patrick is SBA Lender of the Year for small businesses, 2 years running. We've got expertise in business development and sales. And Courtney Watson actually comes to us from the direct sales team at AOL. Now, here's what we've been able to do in just the last couple of months. Number one, we know we needed to validate our scoring methodology. We have credit unions across the country using our scoring product to be able to score over 200 applications for more than $40 million in loan value. Number two, we want to bring on more lease partners. We've got 16 now, and we expect to bring on 100 by the end of the fourth quarter. Number three, we validated market demand. Companies have come to us in advance of the launch of our product and asked us to broker for them almost $11 million in equipment leasing deals in advance of our launch. And last, we wanted to be able to connect with technology partners. And last week, we were actually approved for the IBM Global Entrepreneur Program for cloud startups. And that gives us $120,000 worth of cloud services and consulting from IBM. So here's how we connect with companies. We actually have partnered with industry associations to build our pipeline of potential companies. We have over 8,000 companies in the manufacturing sector, construction, medical equipment, and the like. And we also have a list of 4,700 leasing companies and banks that we work with in order to do these deals. We're using both direct marketing and digital marketing to be able to reach them. So here's what we're after. We are raising a seed round of $750,000 to expand our technical team primarily, developers, UX specialists as well, and our sales and marketing team, both digital and direct. So in closing, my name is Doug Speight. I'm the founder and CEO of Cathedral Leasing. We are going to do for the equipment leasing industry what Expedia did for travel and what LendingTree did for mortgages. Thank you very much.